All right, what up, everybody? It is Jeremy from Escape Velocity Trading coming at you hot for the Sunday Market Bias Update Report for June 9th. Before we jump into charts, let's look at previous week's trading performance. You can see here last week was June 2nd on, so these were the trades that I opened and closed. Had a couple of failed day trades on crude light, longer term position on Bitcoin that closed for about 2,200 gain. Day trade for 2,400 gain on silver, and then another quick day trade loss on Bitcoin. Total futures gains was for 3,140, and the total gains for the week was just over 9,000. That was due to a long-term position in Ethereum, one of the ETFs that tracks Ethereum that I closed out for just shy of $6,000 of gain. So again, total for the week was just over $9,000 in gains. So not too shabby, especially for a week that I was considering to be a development week. So with that said, let's dive into our charts and do our analysis. Looking at the S&P first and foremost, last week I basically said I see it as a development week. I don't see us really going anywhere. Prices did basically exactly that. We were at the lows coming into the week, pushed up to the upper side of the range by the end of the week. And this candle right here is Friday's candle. And last week I'd said that the average hourly wage growth and unemployment claims were going to be the two biggest economic pieces of data coming into the market, and that was happening on Friday. That did come in, caused a bit of volatility. On this chart, you really can't even tell that it was really that volatile. You'll see on a couple other charts as we go into Bitcoin and gold and silver and those kinds of assets that it hit the commodity space a little bit harder than the broad market. But moving into this week, our RSI has crossed back below 70. It is signaling a little bit of weakness. I'm not overly concerned with that because I'm actually seeing this as kind of a cup and handle pattern or ascending triangle pattern pushing into our overhead resistance at 53.85. If we do get a close on the daily chart above 53.85, that is technically a breakout, and you have to adjust your stance accordingly to be a little bit more bullish in the market. Going out to our Nasdaq, basically rinse and repeat, exact same thing. Actually have a little bit more strength in the Nasdaq, a little bit of a flag-based pattern here, threatening to break out and confirm higher. I would probably discount the wick on this and go above 19,020, let's say. And I'm actually going to set myself an alert there. So 19,020, boom. So if we get above 19,120, excuse me. I was like, that's below where it needs to be. All right, so break above 19,120, signaling for the bulls. We do have strength coming back into the tech sector, the tech area of the market. So I am expecting tech to lead if the market does break out. Going out to Russell 2000, this chart has gotten a little ugly. I think the story is being told more on a weekly chart. So if we pop this out to a weekly chart, we can see that we've had a long-term consolidation for quite a long time below the $2,000 level. We have gotten above it, tested below it, got back above it. I don't see any reason for that habit in the market to change. I'm guessing we are probably going to find a bounce on the 200-period weekly moving average around 1970, and then eventually likely resolve to the upside. I am still bullish on the overall market, and I do think that the Russell 2000 has a chance to play some catch up here if we get some stability in the market and Jay Powell doesn't say anything in the Federal Reserve meeting this coming week that spooks the market too terribly much. I do see this eventually breaking out of our diagonal resistance and confirming the upside. When that happens, I will be interested in playing it, but we are still a little ways away. Need some more developments. Not interested in this chart currently. Going out to the Dow Jones. Similar story, sold off more aggressive than I would like. I see this as basically just a wide range neutrality, basically trapped in this range right here. Not super interested one way or the other. If we do get back above the 20-period SMA at around 39,200, I might be interested in playing a move from there back up to the upside of the range. But otherwise, I'm probably going to be staying away from this for the time being and just letting this chart develop. If we go out to Bitcoin, This is where I said you can see a little bit more volatility came in. This was on Friday's data, both with the unemployment claim numbers coming in hotter than expected, and also average hourly wage growth coming in. Average hourly wage growth is basically one of the first indicators we get each month that talks about inflation. Obviously, an increase in average hourly earnings is going to lead to larger scale inflation overall in the market, because if someone has to hire a new worker and they have to pay them more per hour, they have to increase the prices of the goods they sell to be able to compensate. There's not really any way to get around that, especially when the books of so many companies are stretched thin as of now. So any impact to that is going to directly impact the inflationary conversation. The market really hated that, basically because it showed that there is less chance for the Federal Reserve to potentially cut rates. I don't know why the market is still thinking that we're going to get a rate cut sooner than later. It was predicting that there was still a decent sized chance of a rate cut being announced for the July meeting. That is pretty much completely off the table now, and that is why we had this larger volatility candle coming into the market. But that said, this chart hasn't done anything wrong. We are still holding our diagonal resistance line. We are still above the 9 moving average. I see this as probably a few days of consolidation and a breakout higher, as long as the Federal Reserve on Wednesday doesn't surprise us with anything. Going out to crude light. Crude light had been in a great uptrend, and the last couple of months here now, we've just been getting smoked on crude light. We are getting to the point where I'm starting to get interested in looking for a bottoming pattern and potential bottom fishing. And for that, let's toss it out to a monthly chart. And on the monthly chart here, you can see that we wick tested it down to the 250 simple moving averages. We are just below a cluster of the 9 and 20, basically right above 78 and change. I'm just going to call that 78.20. So in my mind, if we get a close on the monthly chart, so we still have about 20 days left for that, but if we get a close above 78.20 on the monthly chart, I will be seeing that as signal for the upside again. If we drop this to the weekly chart and look a little bit closer, we can see we do have a little bit further overhead resistance, basically going back up to 79.55. So ultimate confirmation would be above 79.55 for the bulls. And we have actually on the weekly chart closed below the 200 period SMA for the first time in a long time. In over 3 years, we have never closed below that 200 SMA. So that kind of signals to me that there is going to be a fight here. We are not out of the woods yet. This needs some development. So crude light is off the table for me, other than potentially day trading. If we go out to Ethereum, Ethereum on the weekly chart, not doing anything wrong, similar to Bitcoin, just kind of flagging, coming back down to support. I wouldn't be surprised to see a stall here and have the 9 EMA on the weekly chart come up and start acting as support around 36.40. If we drop this to a daily chart, again, you can see a little bit more volatility, broke the 9, and we are now below the 9 on Ethereum. Probably need some more time off here. I wouldn't be shocked to see it just basically consolidate within this overall range. Lows being around 35.70 and highs being just shy of 4,000. Eventually, a breakout above 4,000 is my base case, but I think we need a little bit more time in development here. If we go out to gold, you can see gold really got smoked on the inflationary data and unemployment claims data this last week, trying to recover. Again, kind of top end of the market problems. We have our support level right here that we haven't even actually tested yet. We are in wide range neutrality, trying to digest this large upward movement. RSI has crossed to the negative, and so has our MACD. So I wouldn't be shocked to see any price movement that moves to the upside on the short term get rejected and come back down and test this lower support level, just shy of 2,300 again before any further moves to the upside might occur. I am doubtful that we are going to see this support level break, because I think there's just too much in the economy pointing towards people wanting the safety of owning gold. So I would be fairly shocked if this support level breaks and prices move further to the downside, but I also don't think this is a time to be aggressive and YOLO it to the upside. Need some more consolidation there. Going out to copper futures. Copper futures had been in a monster tear. It is now reversed. We are obviously in a downtrend, just broke the 50-period moving average. Any retest up into probably $4.55, $4.56 into the 50-period moving average, I'm acting on a base case assumption that that is going to act as resistance, and we are likely going to roll back over again. If we do put this out on the weekly chart, you can see we're also below our 9 EMA, and so it's going to be a little bit of a fight to try to get back up above that $4.56 level. Again, probably looking at this as a potential short opportunity if we do get a bounce up into that decreasing 9 and then roll over with a target down to the rising 20 SMA. And the rising 20 SMA, as it continues to inch its way up here, would actually correlate with our known support and resistance line here at the left of the chart at around $4.30. And that is a stronger support level. So I would be interested in potentially seeing some kind of formation form down here around that 430 level on copper. Going out to natural gas, just broke out of a range and look like we are pushing higher. If we drop this to a weekly chart, it tells an even better story. I don't see anything initially that should stop us from moving back up to $3.40 or maybe even coming up near the 200 SMA on the weekly chart, up around 3.8. So bullish on natural gas and looking for potential entries and plays on that. Going out to Palladium, let's drop this back to a daily chart. Below all of our moving averages, we have held our support level here at around 900. I would be potentially interested in playing a reversal if we get back up around 960 and close above, even though we have our moving averages overhead. This is a zone that buyers have stepped in aggressively prior, and I'm kind of expecting us to have a recovery moment in Palladium. So I'm keeping an eye on that. It isn't a clean trigger by any means, because again, we do have overhead resistance with the moving averages. So caution is warranted there. If you do take a trade in this space, it's probably just a day trade and a momentum breakout trade on intraday charts and not holding overnight. Similarly, if we go out to platinum, platinum actually looks really similar to our copper chart. We broke the 50. We are now testing down in a range. I would like it and get interested down around 950. At the current level, I'm guessing we're probably going to have a retest of this 50-period SMA as resistance now, and I am guessing that that resistance will hold unless something drastically changes over the week ahead. But my base case is probably working back down into the 950 area and then looking for a bottoming pattern and some kind of consolidation down there that cleans up the chart and gives us a better signal. And finally, let's go out to silver. Silver hasn't done anything wrong necessarily. We do have a massive amount of volatility here. You can see just the size of these candles at the top end of the range here comparative to what our normal has been over the last 6 months. But if we put this out to a weekly chart, you can see that we have just simply pulled back into the 9 EMA and are sitting on the 9 EMA as support. We also have our diagonal resistance, diagonal support line here, and we are basically just in a big flag-based pattern as of now. So the real test of this instrument to see where we're going next is going to be how we handle this support level. If this support level breaks, that will officially put us into a downtrend. It will end this uptrend that we've been having, and at that point, lower prices should be expected. I am not expecting that. Just like gold, I think there are too many reasons to own silver right now, and I eventually see this being a buying opportunity if we can hold support right here, get 2 or 3 days of sideways action, and then eventually break back and test this upper diagonal resistance, and then eventually move higher from there, but probably need some time to develop. Going out to UUP. This is also a big reason that the market had kind of a little bit of a shit fit, pardon my French, on Friday. The unemployment claims and the average hourly wage growth caused the US dollar to jump. And last week I'd said in my analysis that we were pushing into the upper end of this diagonal. We had a ton of overhead resistance, but if that gave out and prices did move higher on UUP, looking at the US dollar strength, that was going to be bearish for the market. And right now we are pushing into a really important level at 28.78. If we do get above that and close above that, the next potential stopping point is up at 29, and that will put pressure on the overall market. So hoping to see this go neutral and then start dropping off again. But hope is not a strategy. You always got to trade what you see in the charts. And right now, this is not looking particularly constructive. It gives me a little bit of hesitation of playing to the upside too aggressively. So I will probably tone back again this week my position sizing and the risks that I take overall in my portfolio, and maybe just not take as much bullish exposure as I otherwise would. Before we wrap up, going out to our FinViz heat map. This is a 1 week performance. You can see money is rotating back into tech. It is rotating out of industrials, real estate, energy, basic materials, utilities. Utilities had been on an absolute monster tear lately, and it looks like that party is over. So looking for potential short opportunities in utilities potentially. And then finally, going out to our economic calendar for the week ahead. This week has a lot of data. Wednesday is most likely going to be the star of the show this week. We have core CPI that's going to be important. We're going to get a federal funds rate adjustment for policy. We have Jay Powell speaking for the FOMC statement, and then a press conference to follow. As long as he doesn't say anything overly hawkish here, I don't see it impacting the market too strongly. But the market's going to be looking to see if we hold rates where they are. If he hints at all that we might end up having to hike rates, that will be a very negative sentiment shift for the market. So if he says anything related to we may actually have to go higher from here, the market is not going to like that, and we will see the market sell off fairly hard in that circumstance. I don't think he's going to say that necessarily. I think he's going to try to stay as neutral as possible and just keep on harping on the same thing over and over again. Higher for longer, not going higher, not going longer, not going lower in the foreseeable future either. The market may take that in stride, or they may throw a little bit of a tantrum knowing that future rate cuts might be a little bit further out than otherwise projected. But I think based on Friday's data, the market is probably already expecting that to some extent, and that may already be baked in a little bit on the short term. Finally, Thursday, we have core PPI and unemployment claims, and then Friday, we have the consumer sentiment report. Most likely Wednesday is going to be the one that causes the most volatility, and then charts are going to be in recovery mode on Thursday and Friday if Wednesday does upset the market. Otherwise, I see it basically just being a little bit of a pause, and the market may actually break out on Wednesday. Going back to the S&P's chart, again, we are pushing right up into a potential breakout, and this is a multi-time frame breakout that is looking really clean on the weekly chart. So as long as the Wednesday economic data does not mess this up, this does look like a really nice trigger to the upside. And again, I'm going to be kind of cautious until the end of Wednesday, see what the Federal Reserve has to say, see what the rate policy decision is, and then go from there. But as long as that doesn't blow the charts out of the water, this does look like a really good setup, especially on the weekly chart. So with that, guys, take care. As always, trade safe. Let me know if you have any questions. Give me a thumbs up if you can. Give me a subscribe if you can. I would really appreciate it. Helps me get the word out, get the algorithms kicking for me as I try to share this with a wider community. I would really appreciate it. Much love, guys. Bye.